Perfect.
Well,
Have a wonderful Sunday.
here we go.
Yeah.
Dale,
Here we go. Huh?
it's what they say, last but not least, right?
Definitely not least. So, everybody, Jack is in the house. Hiya, Jack.
Hey,
Hi, Jack.
Hey,
you doing?
Jack. You know, people
Hello.
have been saying for 3 days, "When's Jack on? When's Jack on?" And it's so great to have you, Jack. I haven't talked to you since your last book, that Complete Guide to the Futures Market. I know you're a prolific writer, but if you could just write more so we don't have to wait a couple years between our conversations, I'd appreciate it.
well, I'm
And
doing my best.
yeah, and Stephen kind of ruined my surprise for people that didn't read our schedule about your book title. And when I saw it, I went, wow, you know what? This is going to fly off the shelf. So here it is, everybody.
I got to give Stephen
On,
because
Stephen
was the source for a couple of traders in a book.
right. And I know why now. The title of Jack's new book is Unknown Market Wizards, the best traders you never heard of. What a great idea, Jack. What a great idea. And what an excellent book. And, you know, I was opening the beginning and you have this quote by John Kenneth Galbraith where it said there's two classes of forecasters, those who don't know and those who don't know they don't know. So I was a second one for a long time, and I've evolved into I'm one that knows I don't know. And, you know, I'm really interested in getting your perspective on, you know, what was a light bulb? Because you've done Market Wizards books, guys that have been in hedge funds, guys that are well-known, little book of Market Wizards. What was it that motivated you to look for, you know, what I call hidden gems that nobody knows about?
Well, I guess the real seed of the idea came because my starting with Manuel Bellari, this Fundseeder.com, which Fundseeder, which was looking for unknown traders, and part of that in the very beginning was, well, if we find some really, you know, good unknown traders, ultimately I'll do a book of that. And that was the very, very first thought of doing a book like this. And then the other part of it is, it's kind of the last full Market Wizards book I did. I did the Notebook of Market Wizards, which is more like a short narrative of key points drawn from all the books. But the last traditional type of style where it's interviews with the traders and summaries of that and narratives about the traders, that style of book, the last one I did was Hedge Fund Market Wizards, which had people like Dalio and, you know, and other, you know, some famous hedge funds in there. So this was like the exact opposite, you know, so it's like you go to, and the idea appealed to me. The thought was there are people out there, and when I say people out there, I don't mean just US, UK, I mean anywhere, you know, globally, and that are really, really good, trading their own account, doing terrific, better than probably 99% of well-known hedge fund managers, and nobody knows they're there. And some of these traders in this book, I mean, it's just extraordinary. I mean, there's a couple of guys in there that have like returns of around 300% for a decade plus, you know, and that's annually, you know, so those are ridiculous type of numbers. And then there are people in the book which have return risk numbers. I know people used to using the Sharpe ratio. I don't use the Sharpe ratio, but because everybody kind of knows what a Sharpe ratio is, the people in this book have, you know, Sharpe ratios that are, I don't know, 5, 6, 7, really, really super high. But the amazing thing is because their returns are so asymmetric, they have like
a lower reading,
very large returns on the upside, but not that many on the downside. Then if you use the type of return risk that I prefer, such a gain to pain ratio or a Sortino ratio, the numbers are just off the map. I mean, I've never counted traditional hedge fund managers with return risk numbers like that. So
You
there's
know,
some people in here that
yeah.
are as good as anybody I've interviewed.
You know, in my own way, having, interviewed over 1,000 traders over the years, Jack, you know what I've learned? That there's a big difference between someone who's a great marketer and very popular and somebody who's great in the market. So, when I'm bringing people in from Twitter, I look for the people that don't have a lot of followers and see what the kind of charts they're putting up and follow them and bring them in and lift them up and give them some visibility. So I was very charged up when I saw the title. And I'd like to start with, you divided the book into two categories,
Right.
futures and stock traders. And I'm curious as to what are the similarities, I'm sure there are, and if there are any differences between the traders that trade different asset classes like that.
Yeah, that's a good question. And the answer, I think, is that they don't form groups, So, a couple of the futures guys are similar because they originally traded, and a couple still do, they got started in the same prop shop. So they knew each other and there were influences there. So there's some similarities there, but not because they're futures traders, but because of that background. But the group of futures traders are diverse among themselves with that exception, and the group of stock traders are diverse and completely different. So, like if I go to the stock traders, you've got one guy who literally started with like $5,000.
2,500.
2,500, better yet, yeah.
And he ran it to 50 million.
50 million, and I'll tell you, he's doubled it this year. He's literally doubled it this year. So,
wow.
He's extraordinary. And he's done that. He started, as you read the book, but he's with penny stocks, that was like, and even now he still has a focus on various micro cap, small cap stocks. And so that's one approach. And then you have one guy in the book who doesn't use fundamental analysis or
I was going to ask you, what does he use?
So I got books about Al. I deliberately didn't answer that question because when I would say that, it was like a teaser. Say, here's a guy, and another guy started with like under $100,000. When I finished the book, I think he was at 20 million, but he's well above there now. He's multiplied it a lot. So the chapter title was neither, because he doesn't use fundamentals and he doesn't use that. And I did a couple of, not even done many, I'm just starting the interview process, but I did an interview with it, and then a question would come up. I say, well, read the book and find out. But we're close enough now.
Yeah.
So what he does is he uses social media. And he literally doesn't look at a chart, doesn't care fundamentally. He doesn't want to know fundamental. All he uses is social media. That's it,
So he'll go to Google search and things like that to see what people are talking about.
He actually created he formed a company, created his own software to make the process efficient. So his main source is Twitter. He also uses some other social media, but he used to do it by manually, but he ultimately created a software, rather elaborate software program, and that's turned into a service for professional traders.
Does he use it for both a contrarian view or going with the flow view?
Good question. It's mostly going with the flow. What he's trying to do is identify things before that are going on now, but people don't realize. So, for example, something like LaCroix years ago, where there was this burgeoning transition from sodas and to sparkling water, unsweetened waters.
Yeah.
And LaCroix was in the forefront of that. And at some point, of course, that became obvious. But by seeing these tweets, by being able to measure it relative to other things, he could see these bulge in his mentions of LaCroix. Just lots of examples in the chapter. He was able to pick up on that trend, and just on that alone, the stock, quintupled or whatever. He was able to pick it up before anybody was really onto the trend. So that's
Wow.
one type, and that's the main type of thing he looks for. The other type is more like the contrarian thing. So
Yeah.
did you ever see the documentary Blackfish?
Yes.
Yeah. So for those listeners who don't know it, it's about SeaWorld and this orca who had killed three of the trainers, but it's more about the mistreatment of keeping these animals in captivity. And that documentary generated such immense hatred to SeaWorld. So in that case, what he could see is it wasn't like positive numbers that he was seeing, large amount of tweets. He was seeing an inordinate amount of negative tweets about SeaWorld. So that became since those are contrarian, that became a source of a reason to be short SeaWorld.
Okay. I have to ask you about this, and I also want to let my team know that they can come in. I know everyone has questions besides attendees, but Blake and Stell and whoever is on the team that may want to interject, feel free to do so. But I have to ask you about the Bellhop in Czechoslovakia, who day traded stocks and made a fortune doing it. I can just imagine the guy day trading and also bringing bags up to the room and people giving him a tip and him looking at the tip and going, wow, my day trade, I made 100 times what this guy is giving me. And they have no idea. They think I'm just a lowly bellhop. So tell us about that guy.
So I did the chronology. So this is one of my favorites. And this is exactly the type of person I was looking for. So let me give you the context here. So a fund seeder is a platform traders can link their accounts or whatever. And so we have a ranking thing there. You can see, so every now and, every periodical I'll go on and look at the top, 20 or 50 traders or whatever. But I kept on seeing this account always showing up in the top 10. And the program will show an equity curve. And so if you look at the equity curve, it's like one of those equity curves. It's like a Bernie Madoff type of equity curve, except we know it's real because it's linked to the broker. We're not getting the results from the guy. We're getting it directly from the broker. So we wonder, who the hell is this guy? And he wasn't trading much money. So I finally gave him a call one day, and it turns out that he's a fellow who just finished high school in Czechoslovakia, went into military service for a year, didn't have a job, didn't have an education. So he worked for a Bellhop for 10 years. During that time, he tried to open a restaurant. The business, he couldn't. He was trying to do both at the same time, and he couldn't manage people, and the restaurant flopped. So he didn't have whatever money he kind of scraped together, and he never had much money. But he then started trading, and his first foray didn't work out. He lost the money he had, which was most of it, like 15 or 20,000, not much. Then he did some 6 months intensively research, came up with a methodology, which is still the core of his current methodology. And then he started trading. And from that point on, he's been profitable just almost every single quarter. Now, he's never built the account into much money because he had no money to start with. So what he's basically been doing now for almost 15 years is he makes money on a small trade, like it's been small, between 50, it was originally like a little less than 50, now it's closer to 100. But he just makes him money, and every year he draws out his profits for living. So he's living on his trading profits. And because he never had a large account, he's always just making enough money to buy his house, to live, and that's it. So his account stays at the same size. His performance is pretty much the same. Now, people may say, oh, well, he's not making that much money. He's probably trading these offbeat things. He's actually trading super high volume stocks, in mega cap in most cases. And the reason is because when he started, he wanted a methodology that if he was successful and he ever had the opportunity, that he could then start managing money and not have to change the methodology. So even though he's trading a small account, he's trading an account that has, enormous capacity. And the way he figured out how to do day trading to be profitable, and I don't recommend day trade. Some people pull it off, But his methodology was he figured out, in fact, he was so naive. This is a good story. He was so naive when he started doing his research, he noticed, boy, there are like 4 times a year where these stocks have these big moves. So didn't know why. And then he found out it was because it was the earnings reports 4 times a year, right?
Yeah.
And so then he started focusing on that. So by focusing on earnings reports, he could identify those days where there was lots of potential movement, where he could, because day trade will kill people because the transaction costs are such a large percentage. But by focusing only, and he trades only the day after earnings reports in any stock he trades. And that's part of the methodology,
Wow, what a great story. And, let me ask you this, since you brought it up. I recommend that sometimes when people have windfalls in their trading, that they pull some equity out because, Jack, they're just digits in our account. And the same thing happens at Vegas when you convert your cash to chips. It doesn't feel as real. In fact, when I was at the Merc, I'd go to breakfast with guys that had, 5-figure swings in the morning. And instead of going down to Union Stations and avoiding the 30 below weather, we'd walk 6 blocks to Lou Mitchell's because he had a breakfast special, because then it's real money. And you needed a CPA to divide the check. Do you recommend that people take a portion of their profits so that they can at least, maybe put it into something more conservative, or how about enjoying it and spending it?
Yeah, I do. And I tell you, some of the traders in the book, even though they're making these phenomenal, I mentioned these traders making 700% a year, they still will pull out money. They still pull out, typically, all true of all of them, but one in particular I can think of, pulls out money and puts it into different real estate things or whatever. So he's kind of getting a cushion of wealth, drawing money out, having other sources. And I think that's a good idea, because there are too many people who will make a lot of money and then end up blowing it all because it's still in the account and they get lax because they've done well. If you've pulled out money along the way, then you've kind of secured that, and it's a good idea, I think, overall.
Okay, I'm very interested in the story about the futures trader who lost 500K twice. Maybe I could relate to him, maybe not the same levels, but I have a couple questions. After you lose 500K twice, how do you get funding to do it again?
Well, basically,
how did he?
You're thinking of, it was his money.
Okay.
Well, what happened was he didn't go in with 500K. He built the account up. He started with a small amount, built it up to, in each case, between $500,000 and $1 million, and then blew it totally. This goes to your point about pulling money out. In fact, one of the times he bought a Porsche along the way, and the only thing he had left was that car. So if he hadn't done that, he would have lost he wouldn't have had that. So at least he had the car left, So it was his own money that he was blowing. So after he had made it, and he did that twice, but at least he learned a lesson, and he will never, he said, I think paraphrasing him, said, I said, I may be wrong, I may do this, I may do this, because I will never, ever, ever, ever not have a stop on a trade. Just absolute 100%. There's not a single time I'll make an exception. He knows where he's going to get out when he gets in, and if he gets to that point, he's out 100% of the time. And having gone through the process of building, a $50,000 account into an $1 million account twice and losing it all, that really instilled in him this absolute risk discipline.
Okay,
Dale,
and the other...
I have a question.
Go ahead, Sal. Yeah,
Thanks.
Go ahead.
First of all, I'm going to say it. You guys know it. Jack, when I started my first trading job a long time ago, my boss at the time gave me 2 books to read. First day, one was on bonds, futures, and derivatives. The other one was, you can't see it.
The original
New Market Wizards. I still have it, and I've read it like 10 times. I wanted to ask something. I worked for 10 years. I was a market maker in derivatives in the city of London. I met quite a few people on the floor. The prevailing characteristic that I found on most of them was that they were excellent in mathematics. I know there's a psychological aspect as well to trading, but from all your interviews and speaking to all these people, what would you say the most important or prevalent characteristic is in successful people?
Well, yeah, skill in mathematics is true of some of the traders in this book and in others. And some of them were, some of them were brilliant in mathematics, like Thorpe, not in this book, but in the prior book. But as common denominators, if you had to say which trait is most shared by all these really successful traders I've reviewed, I would say risk management is probably number one. I mean, if you're looking for a common trait, and I can think of only one exception, and there's one interview that I would say at least one, maybe there's more, but one that I can think of out of all the chapters in the different Mark Wizard's book. So that's probably the most common. I would say another fairly common one is discipline. These people tend to be very, very disciplined, in fact, it's no coincidence that it probably across the books there have been maybe 3 or 4 ex-Marines that are in there, which is not a coincidence. There's one in this book. One in this book is an ex-Marine and attributes the Marines, in fact, to his success in life, not just trading.
Blake Morrow, who is one of the partners here at Forex Analytics, is an ex-Marine.
Yeah,
and he is a very disciplined trader, and trades for Gelos. And I always thought that would translate. There he is, right there, Blake. Why don't you talk to Jay? Did that help you being a Marine, Blake? I always asked you that.
I'd like to always think that I'm super disciplined, but like anybody, you fall into traps. I mean, but it has helped me. I do believe. And what I was just funny is I was just fumbling around trying to find my original Market Wizards book, and I actually lent it to a college student who I'd been mentoring, he's actually a family friend, and he's been trading for the last year. And I gave him my Market Wizards book a few months ago, and I totally forgot that I did. But Jack, huge fan, and thanks for being here with us.
I appreciate it.
Steve, you have a question for Jack? I can't hear you.
Can't hear you.
Okay.
Okay, sorry.
There you go.
I was muted from the headphones. I didn't realize that I pressed the button. So I said I had actually the same question that Stelios had, and I wasn't surprised to find out that the most common characteristics are actually mostly psychological traits, right? Because discipline and money management, in essence, they're both coming from the same psychological characteristics. Being able to follow a plan, being able to stick to the rules. And yeah, I'm not surprised that's what you found out.
Psychology is really more important than technique, and that's I think true. If anybody reads any of the Market Wizards books, then I think if you get it, you can't come away with anything other than that message. And particularly in this book, there are a couple of traders who, there's one in particular that I can think of. It is so essential to what he does. I mean,
was he one trained by Steve Goldstein? Who talks about?
He is one that Steve Gold that works with Steve. Yeah.
Okay, yeah, because Steve talked about the closure and the process on the right side.
Yeah. So
psychology.
There's a lot of things in it. It's a matter of getting very, very focused. He prepares for trades. This particular trader will look for, like, say, it's going to be an announcement by the Fed or another central bank or some other thing that's coming up, and he will be first. I'll do all the research. He'll know exactly. He'll figure out every possibility that can come out. He'll know exactly what he's going to do, but then he gets himself sort of mentally in a state of preparation. He sort of almost mentally will he'll do mental rehearsal for everything. So it almost becomes all automated that when it's happening in real life. But he's intensely focused on the psychological side. Also very important about, and a number of the traders talk about mindset, how critical it is, and that you have to be in the right mindset to be trading, and what to do to get into that mindset, and what to do if you're not in that mindset. This guy came up in a number of interviews. So there's a lot about psychology in this particular book and in all the other market wizards books as well. But I found it came up maybe more in this book than in some of the other books even.
Another question I actually had is if you've noticed if there is a tendency for successful traders to focus more on shorter or longer term time frames.
Basically, it runs the gamut. I think in this book, if I looked here, from this book, I would say a lot of traders in this book would focus very short term. And literally a couple of them are just trying to pinpoint an exact moment, critical moment in the market. And then they go in. The reason they've done so well, they're so prepared, they're so good at it, they go in really, really large. And they might be out in a half an hour. And if they're wrong, they'll be out in half a minute. So you do get, in this particular book, a lot of people focus on the short term. The Czechoslovakian Bellhop, like in and out the same day, which is long term compared to the couple of guys who focus on the events. So there are quite a number of traders in this book with short term, but some of the other traders are longer term. We talked about the fellow who lost his, who lost nearly, his built account up to near $1 million, lost it twice. He'll be in the market as long until he gets his signal to be out, and that could be months, it could be a year. So he's longer term, or it could be 2 days, but he can stay with a trade a very long term and ride it through some big gyrations, as long as he doesn't have his signal either to get stopped or to get out because he's reached his objective. Then he'll stay with it, and it could be very long term. So the social media fellow, he also can trade. He can trade an idea for years, like Chipotle when they had the E. coli scare, because he monitored through his ways of monitoring social media. He was able to tell that this was still a problem quarter after quarter after quarter. And so while he may not have held a position the entire point, he was trading that idea for years. So it runs the gamut. You get people who literally are trading in a time frame of a minute to a half hour, and people are trading, over time frame that could be years. So that's variable.
What you say in the book, Jack, is whether people are short-term or long-term traders. You say in the book that if you're looking to just spend 2 hours a week for 100% return, this is the wrong book.
Yeah.
And so no matter what these guys are doing, whether they're scalping, day trading, or position trading, I know it takes a lot of work. A lot of people think that, money's going to drop into their account. Everyone has a secret. The secret is there is no secret, right, Jack? It's hard work, it's perseverance, and living through adversity. Would you say that this theme runs through all the unknown market wizards that you have interviewed? Hard work.
They're all in their own way. They're all super hard workers. You'll see that in every chapter. An immense amount of work that they have done to put in, and
more than an 8-hour day I bet a lot of them.
One the fellow who talked about making 300% a year. He talks about how in the beginning he would be putting in 18-hour days, literally. The bellhop. He's hardworking by nature. Like he used to work as a bellhop. He's trying running a restaurant at the same time. But when you got to trading, so he only trades around earnings reports. But even that means that 4 months in a year he's super busy. I'm talking 4 months. I don't mean continuous, but over 4 months. 4 of the months he has most of his trades, and over 4 months he has reasonable amount of trades. 4 months he hardly has any trades, but he doesn't just take off and go on vacation. those 4 months he's researching how to improve his methodology. So it's kind of innate in these. The ex-Marine built this elaborate software program to trade, so he could have a program that he could put in all types of scenarios, and when something happened, he'd be able to know exactly. It would automatically put in the orders. But that was an immense project, and that's besides the time he was putting in on trading. So they all tend to be really hard workers, and I think a lot of people go wrong because they think that trading is it's like an easy way to make a lot of money. Well,
You know, when I was a rookie,
you could make a lot of money, but it's not an easy way to make a lot of money.
yeah, when I was a rookie, a veteran pulled me aside and said, "Kid, this is a tough way to make an easy buck."
Yeah.
What do you think? Yeah?
I think that might even be a paraphrase of a quote in the book, I think,
Okay, so I wanted to ask you this. The title of the book, Unknown Market Wizards, and your first chapter is about someone that I know.
Yeah.
And I think a lot of people know. So you included Peter Brandt in this category. Right. What was the rationale for including someone who I think is well known in your book, Unknown Market Wizards?
And he's the one exception. And maybe the social media guy, because he built a company, some people may know him from that. But Peter was an exception and I acknowledge that in the first. I say, well, in the introduction, I talk about that. So Peter was actually was the catalyst for writing this book. I've known Peter for quite a number of years, and he's so right on his views on, when he talks about trading and everything. And so many times he has such quotable things. And I hadn't put Peter in a book. The last Market Wizards book I did was back in, the full one was in, I think, 2012. I may have known Peter at that point, but not well enough. And but once I knew him, I thought really it'd be a shame if his wisdom was kind of not immortalized in the book, And so Peter and I both live in Colorado. Well, now he's moved. So now he's not in Colorado anymore. But at the time, he was in Colorado. He was a couple of hours away from me. And I thought, well, I'm going to do the chapter. I'm going to do this book. I might as well do the book before he moves out of Colorado, so make it easier, because I know I'm going to include him. So ironically, though, by the time I got around to doing the book, he was already out of Colorado. But so I flew to see him in what was he?
Tucson.
Tucson, right. So thank you. You read the book well. So, but I wanted to capture what he had. So now, in a sense, he's known well in a certain audience because he has a very large Twitter following, which he's built over the years. When I was first going to had the thought to interview him, he didn't have this big following, and people didn't know him, and he never really managed. He managed money for Commodities Corp, but that's like years ago, and that's sort of a private prop type firm at the time. And he was never a manager that people knew, like a hedge fund manager. So he is unknown to still a large segment of the market. He's not known. He's only known to this narrow group of, not a narrow, but a group of traders who follow him on Twitter. That's why he's known. But the reason I made an exception is because I thought it was very important to capture him. I still felt he was relatively unknown to most people. He didn't manage money. Maybe a more unifying theme for the book is not just unknown, which is true for almost everybody, but they're solo traders. So we're not talking, there's no people managing other people's money. All of these traders are just managing their own account and doing extremely well. So, but that's a good question.
I love his work. He's a classical technician, cut his teeth on Edwards and McGee and the authors before that. And you know how what I really love, because I've heard this before, when he was a floor trader at the CBOT, Peter said you knew your account was in trouble when you started trading oats.
It's in the book, yeah.
Yeah, I mean, what a great quote, because they're less beta.
You have to be a bit old time commodity trader to appreciate that.
Well, I'm old time. So, Jack, is there anyone else that really you'd want to wrap it up with that's in the book that really is kind of a standout that you could talk about before we, wrap up this interview?
We've hit, I think we've referenced a lot of traders in the book.
How about the tennis player?
Oh yeah, he's phenomenal. So basically, he grew up in kind of lower middle class London, and he started in his early teens or just before, so late for a tennis player. I think he started playing tennis about 12 years old or so, which is late for somebody who's going to turn semi-pro. And he was very, very good. He was pursuing that kind of intensively, and he thought he wanted to become a pro tennis player. But a couple of things happened to him. One was that he was being trained by professional players, and he's like one person who was now sort of no longer young enough to be playing, was coaching, and he kind of thought to himself, and he had to go. Actually, another coach had to go back to school to learn a new profession, and he thought to himself he didn't want to, even if be in a profession where he succeeded, or first of all, you don't know you're going to succeed, but then you would have to maybe end up having to be a coach or end up having to go to a second career in your 30s and stuff. So that kind of made him question that whether you want to be a professional tennis player. And then one day, his coach had set up him to play another player, a very good player. And after he won the set and everything, he told me afterwards he didn't want to intimidate him, but that the guy he played was a top ranked player and so forth, and the fact that he could compete at that level, though, and he didn't feel, wow, I could really do this, kind of was an inner sign that he didn't have the passion to continue. So he actually ended up giving up. Then he got injured playing soccer, but he gave up that. Now he went on. He's one of those traders with the multi-100% a year returns. He is one of his idols is Ray Dalio. And an interesting sideline there is Ray Dalio, some people may remember, put up for charity, you could bid to have lunch with Ray Dalio. So he decided he was going to bid. And he was like the leading bid. And there was about a half an hour left in the auction. And he had to get home. He got on the London Tube. And he got out. He was hoping to get back before the thing closed. And by the time he got out of the tube and had the connection, his cell phone connection, he found that somebody else beat him on the bid. He was number 2. So he was like devastated. And then it turned out that he called them and Ray offered to have a second lunch if he would meet the winning bid. And he did that. So, and he couldn't remember anything about lunch other than his conversations. I asked him what he had. I think he ate a single thing, But he's a pretty good trader.
Yeah, I would bid to have lunch with Jack Schwager. You could do that for charity. I could just tell from the reaction we got from when you agreed to be with us for this summit that a lot of people would, I'd rather have lunch with you than Buffett.
I would outbid you,
right? You probably could. I mean, you Greeks, you have a lot of cash, but Jack, if anyone in the audience would like to ask Jack a final question, here's my prediction, Jack. This is going to be one of maybe your best-selling books. You know what I love about the book? It gives traders hope, okay, that they don't have to come from a money background or be set up with a membership at the CME, that they could be a bellhop and they could be a Marine. And if they really put their mind and energy towards it and live through some tough times, it could happen for them. So this book is going to give hope to all of us that, do battle with high frequency traders and algos. Is inspirational.
Yeah.
So thank you, Jack.
Yeah, I appreciate that. And
Mr. Schwager, One question. You've met so many traders over the decades. If you were forced to give all of your money to one manager,
What a
who would that be?
question.
Blake Morrow.
But all of it.
Contiguous.
Nothing on the side.
There are a number of traders in this book that I'd be very, comfortable giving my money to.
Not on this book, generally, from all the books you've written.
You're not going to get an answer.
Yeah,
out of
exactly.
them. Anyway, Steve's playing hardball with you, but Jack,
can I say something really quick?
Blake.
I've had the 2 original Market Wizards books of yours, and I'm excited actually to read the new book. And what I've realized over the years, over the 20 some odd years, because like Stelios, that was the first book that I read in 1996, was the one that was published in 89 or 90, I believe.
Yeah, that's right.
Yeah.
That's exactly right.
And so that was the first book that was handed to me with a Mark Douglas book, the Disciplined Trader, I believe. And it's been a staple of mine through the years. Like when I struggle in the market just like anybody else, Marine, ex-Marine, infantry Marine, it doesn't really matter. I struggle just like every other trader. I sit back and probably every 2 or 3 years, I'll read a Market Wizards book, and from the great Jack Schwager. And I highly recommend that everybody picks up all of the books that you've had and you've written over the years, because they're timeless. What traders experience today, despite the changing market dynamics with algorithms and volatilities changing in different marketplaces, as traders we still deal with 30 years later the same psychological issues. And what it does make us all realize is that we all are human and we all deal with those same issues and struggles. And it's not just you at home as an individual trader, it's everybody out there. So thank you so much for bringing that to light to the whole trading community.
Thank you. Appreciate that.
Well, much success. And, these guys aren't going to be unknown Market Wizards anymore, Jack. You know that, right?
Yeah.
All right. So anyway, Jack, thank you so much for being with us today, and appreciate it. And anything you want to say about FundSeeder before we say goodbye?
It's a FundSeeder. It's a place where you can get a free analytics as long as you either link your account or upload your data, and has some neat stuff, neat statistics, neat charts. You can even run technical analysis on your equity curve. So if you're a trader that wants to do some analysis on your results, it's a good place to go.
Might get discovered and funded too, right?
What's that?
Might get discovered and funded.
So, yeah, we're working with, we're currently negotiating with some institutional investing groups. I'm not sure which one, but ultimately we hope that one of them will be the key, and it'll be a source.
Love you, Jack. Thanks for all you do for the trading community, buddy.
Thank you very much. Appreciate it.
Thank you, Jack.
Thank you so much, Jack.
Thank you. Okay.